And welcome to the broadcast. My name is Rob Booker. We'll get started in about
Howdy,
5
friends.
minutes.
How are you?
I'm excited to
And
be here
happy
with
Friday,
you.
everybody.
We're going to take a look at the charts. We're going to discuss a trading strategy that is often overlooked and potentially highly profitable also. So I'm glad that you're here. Thank you for joining me. And happy Friday. Once again, we're live. It is Friday, July 7th. It is just about 2 p.m. Eastern Time. My name is Rob. That's me on the screen there. We got the countdown timer going. I'm the host of the Millionaire Challenge podcast on Spotify and Apple Podcasts. And I'm also the live trading expert for the morning session inside the Tim Sykes Challenge. Thanks for being here and welcome to the broadcast. And we're going to get started in just a couple of minutes here. And for those of you that are on time, we're going to take a look at the live market right now. There may or may not be a trade setting up. And what I'd like to do is take a look at what might be out there and what we might be able to take advantage of today. GRRR was a mover today. NIR is back up again and approaching the highs of the day. We're going to see if it can reach and breach those highs. It has struggled to do so, so we'll see if it can. And then there's Prestige Worldwide, just fresh off of presenting at the Catalina Wine Mixer. That's just a joke. And we'll see if this stock can continue its rip higher or if it's just seen all it's going to do. It's been a weird one because never really heard of this stock before, and no one has because it's an IPO. And it's based out of Hong Kong, which is already giving me sort of a little bit of suspicion that it's not necessarily the real deal. So we're going to see if this thing has what it takes. If it can break through the pre-market highs, then this thing can go a lot farther. But I doubt that it will be able to do so. Welcome, everybody. I'm glad that you're here. Thank you for joining me today. It is Friday, July 7th, and the market is still open. It's almost 2 p.m. Eastern time. And so while the market is open, we can still find trades perhaps. And I can't wait to see if we can find one. And I'm looking forward to maybe trading together with you a little bit today. It's been a very, very, light trading session for me today. I had a couple ideas, but the market wasn't as active as I would like it to be. And we'll see if it picks up a bit here in the afternoon. It's sort of a holiday week, of course, with the 4th of July holiday. And we'll see if anything goes on. Wow, some of these stocks are fascinating right now. Wow, okay. A lot going on here on the screen in front of us, and GRRR, which I thought might break out further and keep going, has stalled and is dropping. PMW, which is right up here, and that has been moving up all day. Recent IPO. Maybe it's taking a break. Maybe it's ready to drop back lower. And NIR, also on the screen here. We'll be looking at that as well. There's a lot to get to. We're going to talk about shorting stocks. We're going to talk about buying stocks. We're going to talk about a trading system. We're going to talk about tips and tricks and strategies and ideas for the summer trading session. So welcome. I'm glad you're here. You can introduce yourself to me inside of the chat, and can't wait to get to know each other a little bit better. And we're going to share a trading strategy and so much more. Thanks for joining me. Thanks for being here. It is now 2 p.m. Eastern time, and we're going to get started almost right away. Thanks so much for being here on a Friday. And if you give me a moment, I'm going to shut off all interruptions, and I'm going to give you my entire focus, and I can't wait to get to know you better. Okay, here we go. Welcome, friends. All right, for those of you that are here on time, you're looking at my trading setup, my screens that I usually will look at between 2 and 4 stocks, one for a buy trade, the rest for short selling. I'll get into that a little bit later for those of you that are unfamiliar with that. And today, we're taking a look here at PWM, recent IPO, company based in Hong Kong, and has just been shooting up like a rocket. And the high of the day is $16.90. And I would be willing to buy that stock above that level. Then we've got NIR, also a high of the day here at $2.13. I'd be willing to buy that stock above that level. We'll see if either of those can do that. I'm not sure on a kind of a shortened, strange holiday week if either of those stocks are going to be able to move as much as we would like them to. And that's okay, because next week the market should be back and a little bit normal. For those of you just getting here now, welcome. It's Friday, July 7th. My name is Rob Booker, and I'm going to introduce myself, and we'll get back to the charts, and we may even find a trade or two. So I'm happy that you're here, and welcome. Happy Friday to you. I'm here on behalf of Tim Sykes. Many of you know Tim Sykes. He's the millionaire and mentor and best-selling author who turned $12,000 as a kid into over $7 million in profits. He donates all of his profits to charity, of course, and you've seen him on social media and on television and so many other places. Tim and I have known each other now for 16 years, and we work together inside of his Challenge program. And many of you are already familiar with the Challenge program. It is the educational program designed to help traders have more success. Now, he's been ultra successful at mentoring traders, and many of you know that already. There are 30 plus Millionaire Challenge students. And if you're ready to learn his strategies and you're ready to hear more about how traders like Tim Grattani turned $1,500 into over $18 million, or Mari turned a small account into over $1 million, or if you just want to get more information on how hundreds of traders have been able to make thousands of dollars, then of course you're in the right place. But I have to give a disclaimer here. I'm not here to guarantee you that every single trade that we're going to take is a winner. And I'm not here to guarantee that if you and when you join the Tim Sykes Challenge that you're going to have just the same amount of success. You could have more and you could have less. And it's important to disclose the very real statistic that most traders lose money. I don't want you to be one of those traders. And I'm not going to harp on that very long. I don't want to spend the whole webinar just talking about how traders lose, because you've got a choice. You can do things the same old way that most people do them, or you can follow the strategies of proven millionaires and you can get yourself on the path to success. So today I want to teach you in a really approachable, easy to understand manner. I'm going to leave lots of time for questions at the end of this presentation. And I just want to get to know you better. So one of the most important things that helps me help you the most during this webinar will be participation. So I want to kick things off here on this Friday, and I want to give just want to give some prizes out. So let's start with a $20 gift card to Amazon, or you could just have $20 in cash, or Venmo or Cash App or whatever, or Apple Pay you. Let me know in the chat box where you're from and how long you've been trading. And I'm just going to pick one person at random, and that'll be our first prize of the day. The next prize after that will go up to $50. I just would love to get some participation here. I want to hear from you. I'm going to open up to questions later on, and I want to make sure we have as much participation as possible. I'm not here today to make any money off of you or anything like that at all. We're going to share some charts. I'm going to teach you a trading strategy. I'm going to share with you some ideas on why so many traders have failed. I'm going to tell you what the two top traders who have combined for $30 million in profits, what kind of trading they are doing. And I'm going to teach you how to do that type of trading also. Once again, I'm not here to make any money off of you. This is a purely informational session, and I'm here because I just want to build some trust with you. I want to get to know you better, and I want to see if we could work together in the future. And if I can build some trust with you, and if I can prove that what we're doing has been helping some traders, then we're going to be in really good shape here together. So welcome. Joshua's here from Louisiana. Nice to see you, Josh, once again. Justin's here from Dallas, Texas, been trading for years, but 1 week on the DIT platform. That's fantastic. That's just awesome. Josh is here from Orlando, Florida. And this is great. Kristen's from San Jose, brand new. That's great. Dale from SoCal. I grew up in Mission Viejo, Dale, so nice to see you here. Nicholas is here from Boston, Massachusetts. Carl's from Oakland. Janice calling from Charlotte, North Carolina. Frankie. Nice to see you, Frankie. Robert just started. Oh, nice. Nice, Robert. Welcome. You just started. Well, let's kick it off. I'm gonna do more prizes, everybody. I'm just so glad to see all of the participation here. This is fantastic. This means a lot to me. So I'm gonna drop a number in the chat box, and here we go. So it's just gonna take me 1 second here, and I'm gonna drop a number. You can text me if you're the winner, and I'll send you the number to text. It will take me just 1 second. And then we're going to get this thing started. All right. This is awesome. It's good to be here with you, everybody. Welcome to the broadcast. All right, here we go. I'm going to copy this number. I'm going to drop it in the box for our friend, our brand new friend in New York. Robert, you're the first winner of the day. Thank you for participating. So text me and let me know you won $20. and that will help me follow up and make sure you get what you deserve. Okay. Hey, everybody. Welcome. This is fantastic. Nice to have you here. So I'm going to do my best to get to your questions as we go. So save up your questions as I teach you a methodology, and then we'll take it from there. So just to introduce myself very briefly, I started trading in the year 2000. I had $100,000 in law school loans. I went to law school, took the bar exam, but I really wanted to be a trader. And so I decided, I walked, this true story, I walked upstairs into the law firm that hired me, and I sat at my desk, and I was ready to go to work. I'd gotten the job, and I sat there. It was about 5 minutes, and I realized if I stayed there any longer, I was going to get sucked into the lifestyle and the money, and I really didn't want to be an attorney. So I walked into the partner's office that hired me, Jay Pimentel, and I just told him, I'm sorry, this isn't for me. And he just looked at me with this blank stare, and he just, I remember what he said. He's like, there's a lot of people lining up for this job. And I said, yeah, I'm aware of that, but it's just not for me. And I left, and I started my trading career in the year 2000. By that time, in the year 2000, I had ramped up. I had made a little bit of money. I had saved enough. And so I had a couple of months of savings ready to go. And then I promptly lost my first account, and I was totally out of money. I lost my first account. I put some money in the account. I lost that too. And I was really disappointed. And I thought to myself, I'm going to have to practice law, which I don't want to do. And it's a nice lifestyle for some people, but I don't think anybody here likes or appreciates having a, normal job. So I got a mentor. A friend of a friend introduced me to a hedge fund manager who lived in Switzerland. I paid him $10,000, and he taught me how to trade. A few years later, I was featured in the book Millionaire Traders. I wrote some books. I started a YouTube channel. I started a radio show. I was on for an hour before Dave Ramsey on AM Business Talk Radio, and I managed $8 million as a commodities trading advisor. And that's my story. I sold the radio show and the podcast and the YouTube channel. And now all I do is trade. And I do webinars every once in a while, like this one. And a couple of months ago, Tim Sykes reached out to me, and he asked if I would trade live with the members of the Tim Sykes Challenge every single day. And I said, yeah, absolutely, 100%. And so we joined forces, and now Tim Sykes and I work together. And so one last brief introduction to the Tim Sykes Challenge is this. The Tim Sykes Challenge is a complete course and a live trading program that helps you have more success in your trading. Okay. And today I'm going to drop a link a little bit later on, and you're going to have a chance to discuss with me or a member of the team whether or not the challenge is right for you. That's it. That's the only introduction I want to give. And what I want to do now is I want to move back over to the charts. And I want to talk to you about, why traders are or are not successful and what kind of things that traders are going through. So look at PWM breaks out higher, and the stock has now halted. Let's see where this might go. So this is a perfect moment for us to discuss and for me to reintroduce to those of you that are unfamiliar with it, the main primary methodology that I use inside of the Tim Sykes Challenge as I teach, instruct, and trade together with members of the Tim Sykes Challenge. I look for stocks to break out above the highest level that they've gone today so far and continue upward to certain profit target levels. And at the beginning of this webinar, before most of you got here, we were talking about PWM, this recent IPO, a company based in Hong Kong. And we said, if it can break above the highs of the day at 1690, that's a buy trade, and it most certainly is. And the next target is $17.95. Now, the stock is halted right now. And if you're unfamiliar with a halt, that simply means that the stock exchange has stopped all trading right now in the stock. And while the stock is halted for public trading, they are sorting through the order book and trying to get all the orders filled and line them up and get them organized. And they have to shut trading down because it just became so volatile, they could not fill the orders fast enough. And that's what's happening right now. When it reopens, it should reopen higher, and it should be able to get to $17.95. We'll see how far this can go and if this begins to falter a little bit later on and as we proceed. But step one in this process is trading breakouts on stocks that are moving and breaking through levels that they have not been able to breach before. All right. Richard says, I don't know what sock I have. All right. Well, just look down at your feet I'm just kidding. I know what you mean. Okay, Richard. Well, I don't know what you have either, and let us know what you're asking. I'm here to help you all. So, Richard, just maybe rephrase your question and let me know what you're talking about. All right, here we go. What are we supposed to text, R. Martin? You don't have to text me anything. You're only going to text me if you're the winner of one of our little contests that we do today. All right. As we get started here, I want to invite all of you to ask anything you'd like to ask as we proceed and look at these stocks. I'm going to look at another stock that's been moving today, NIR. I'm going to bring up a couple of points. NIR made a high in the pre-market session this morning at $1.44. It then jumped above that level and ran upward. And then it made a high of the day at $1.80. And then it broke above that level. Both of those breakouts, the first one down here and the next one up here, both of those are buy trades. Why would I do that? Why would I want to buy trades on a breakout? Why wouldn't I buy them on a dip? And the answer is, well, buying on a dip is perfectly fine, and it's totally possible. But what I do when I teach the Tim Sykes Challenge students, and what I'm teaching you today, is what I want you to look for are stocks that are already doing what you want them to do, already breaking out and going higher. Have you ever bought a stock on a dip and then it just kept dipping? That's annoying. That's really, really problematic. We don't like that, and we don't want to do that. If you've ever done that before, then what you've done is you've bought a stock on a dip thinking that you did the safe thing because your stop loss was really tight. When in reality, stocks that are falling can continue to fall, especially some of the stocks that we look at often as day traders. What I want you to do instead is I want you to try to imagine what it would be like if you bought stocks that were strong and you bought them on strength and you just let them carry your trade along. Instead of trading against the flow, meaning buying a stock on a dip, I want you to consider what might happen if you buy a stock that's breaking out and showing strength. I don't want to buy weakness. I want to buy strength. Now, there are dip buying opportunities and there are dip buying strategies that work for plenty of people, and that's great. But if you've ever struggled to make money consistently from trading, one of the reasons might be that you're not finding the right stocks to trade. And the second reason might be that you're just not setting up your trades in the right way. And I want to share with you some ideas and some strategies and some techniques that we've been using, really successfully over the time that we've been trading together as a Tim Sykes Challenge team. Okay. Richard says, all the days by question, because this talk I have you and have on that market, I'm all Bell and General Electric, which going on the market anymore. So that was a direct quote from Richard's question. And Richard, as you can imagine, I'm not understanding exactly what it is that you're asking, and I'm so sorry. Okay. Rose says, may I ask if the stocks to trade and Tim Sykes the same? I'm confused. Tim Sykes is a co-owner of Stocks to Trade. That is correct, Rose. He is a co-owner in the company Stocks to Trade, and Tim Sykes is deeply affiliated with Stocks to Trade. Yes, absolutely, 100%. Okay, Andrew says, do you still use the strategy you called the Launchpad? Andrew, this seems like a repeat of your question from last night. And Andrew, yes, we talked about it last night, and you were there. And so I'm not going to repeat the answer, but yes, we talked about it last night, Andrew, and I'm so glad to see you again. Hopefully you schedule the time to talk to somebody here also. Okay. James says, did I miss something? All right. Hey, James. How are you? I don't know. I'm sure we all miss some things. James, do you want to be more specific? And then Jeremy says, talk straight. So, all right, everybody, let's do another contest. Let me ask right now, if you're up for a contest, let's do this. Let's do a $50 gift card this time. I would love to hear your questions, and I'd love to hear as many of them as you want. Here we go. Ask me any trading related question, but check your grammar before you ask the question. Ask me any trading related question, and I will be happy to help you starting now. And I'll pick one question and I'll give the winner at random. I'll give you a $50 gift card or send you Apple Pay or whatever else it is. Okay, that's great. James Navoa says, Rob, do you know James Fried? Yes. Yeah, of course. Because I've been talking to him for my challenge course. Yes, of course. Yes, absolutely. 100%. James is awesome. Absolutely. Okay. Jaime says, hello, if I'm with Tim Bowen, do I have the benefits of your trading? No. Tim Bowen we're not brothers or twins or the same person. So apologize. No, we're not the same. Okay. Dale said, I've held a couple of stocks that were doing quite well until both had a bad week. Rose said, is the challenge different for the stocks to trade subscription? Yes, they are different. What do the gray volume bars indicate? I don't have any gray volume bars, so I'm not sure what those would indicate. Oh, this is great. These questions that are coming in are amazing. This is awesome. This is perfect. Wow. Josh says, how do you get over the fear of holding on to a run too long? I'm gonna tell you exactly how I do that. I don't hold on to them for too long. Absolutely not. All right. And then Janice says, NIR shows dropping. Would this be a good time to buy? Shows dropping. Everybody check your grammar when you type your questions. Okay. I'm going to answer our friend Josh's question about getting over the fear of holding on to a trade for too long. And then I'm going to get into, is the fact that it's dropping a good time to buy? Absolutely not. Absolutely not. And a whole bunch of you just got here. Hey, everybody. Nice to see you here. All right. Wow. Your question, some of the, Robert March says, does trading currency the best way to trade? Everybody, you got to check your grammar. You got to check that. All right, here we go. Josh, let's answer your question about holding on too long. So Josh, when I set up a trade like here on NIR, when I set up a trade, I'm looking at breakouts. And for the person who asked if I trade on a dip, I don't. It's dropping. You don't buy stocks that are dropping. If you buy a stock that's dropping, it's probably going to keep dropping. Hi, Trevor Stokes. Sorry, a bit late. Hey, Trevor. You know what? I'd love Trevor. Let me know. Were you at another webinar or what was going on? I'm always excited to hear what was going on because sometimes, especially today, we had a huge boost in attendance in this webinar. 20 minutes in. So, Trevor, could you let me know? Like, I wonder where everybody's coming from that just got here. Would you let me know in the chat? We can actually open up the contest to everybody here. I love participation. Can you let me know where you were at? Okay. Okay, here we go. So, Josh, how do you get over your fear of holding too long? So, on the breakout on NIR above the pre-market high today, what we do, Josh, is we set up profit target levels. And as soon as it hits profit target number 1, we move our stop loss to break even. Profit target number 2, we can move it up again. And profit target 3, we can move it up again. And profit target 4, we can move it up again. And then we would stop out up here. So, Josh, we don't hold too long. The most important thing you can remember is you don't need to hold on to a stock for a long time. What you need to do is make sure that you're just consistent and your win percentage is really high. So don't worry about holding on to a stock for too long. In fact, you don't necessarily want to hold on too long. Trevor just got 15% using the strategy. That's awesome. That's awesome. All right. It's so good to see you all here. Dennis was with his wife for lunch. That is so awesome. That is so awesome. Bob got a text that it started at 11:15 Pacific time. Very interesting. Okay, thanks for all your answers. This is great stuff. This is really cool. I'm really happy to see you all here. Okay, Dale mentions, which he looks like he's following up on something. He says, which led me to sell both stocks at a loss. Since then, both have recovered. One is now higher than the high I held before I sold. Would it be a good idea to buy those stocks at the new higher prices? No. So, Dale, that's called chasing a trade. Okay, Michael says, oh, wow. So we all received a text, I bet. Received a text that starting in 15 minutes. I immediately logged on and you had already started. Oh, that is fascinating. That is really fascinating. Thank you. Okay. Okay, hold on a second. I'm going to let the team know. Okay, so this is great. I'm letting the team know that um that your notifications were really delayed. Okay, let the team know about that so that doesn't happen again. Okay. Yeah, I think the schedule we should have the schedule just sort of up there and out there. Yeah, absolutely. Okay. Thanks everybody for letting me know. These questions are great. All right, I'll announce a winner in just a moment. Now let's talk about buying on a dip. So you can see NIR here. And we had an excellent question from someone who said, NIR is dropping now. Would it be a good time to buy? And the answer is no. And there's a really good reason for that. Once a stock starts to drop, it can just absolutely crater and continue to drop and become a huge problem. And this is what happens to traders. They'll buy a stock as it's dropping, thinking that it's a good idea to buy it on a dip, and then it just falls into oblivion. So what I recommend that you do when you look at the market, and this will change the way that things go for you, I promise, is you look to buy stocks on breakouts instead of on those dips. Now, there's another question that came in, and he said, I'm getting these trade alerts, and the trade alerts always arrive so late that I can't even take the trade. So what I want to recommend that you do is start setting up these trades on your own by looking at volume and float, and you're going to start finding some of these trades on your own. Okay. All right. How do you know it's a dip and not a break? Okay, so Lindsay, I'm not sure I understand the question. So a dip, when someone says they're dip buying a stock, they're buying it as it is dropping. Okay. And let me just reshare my screen here for everybody. There we go. So what happens is what they will do is they will buy a stock as it is dropping. And that to me can be very dangerous. And the reason it can be very dangerous is the stock may not be done falling and it can continue to fall. Buying on a breakout means that you're buying on strength. It's also referred to as like momentum buying. And the stock breaks out and it has momentum that's stronger, and then it continues to rise from that level. So that's the difference between buying on a dip and buying a breakout. Let's see what PWM is up to. This is the stock that we looked at a few minutes ago. Excuse me. And it broke out above the highs of the day and then immediately jumped up to those profit targets that we were referring to. So it kind of did exactly what we look for and exactly what we were expecting. And that's how we trade. So the next level that we'll draw is above the high of the day up here. And a breakout above that high of the day at 1955 is another buy trade, which is wild. It just keeps breaking out and moving higher. And if it breaks out above that level, the next level higher is $20.67. And that's trading a breakout. And that is a way to trade where you are. Now, I wouldn't mind trading this breakout. I would have absolutely no objection to doing that. And so we can actually watch this as it develops. Now, it doesn't have to break out. And the later in the day that you watch for these things, the slower things get usually. But this stock has been on fire, which is just wild. It's just a Prestige Wealth, which sounds a lot like Prestige Worldwide from the movie Step Brothers. And it keeps jumping and halting and jumping and halting. And we'll see here if it's able to break above $19.55. We'll see if it is. So let's just maybe take a look here, see if it is. And it looks like it's getting very close. And it's going to try to break out above that high of the day so far. And if it does, probably get all the way up to 20. $20 is a really nice round number on this stock too. And you can see it's not a buy trade until it breaks that level. And you can see it's struggling to break above that level. And it's struggling for a reason. It's had trouble there before. And if it can break through it, then it proves that it can break through a level that it wasn't able to break through before. And that's the definition of trading a breakout. Some people, for example, would get excited and they would buy this stock now. And then what could happen is this thing can reverse and it can fall a long, long way. And then people are kind of stuck and they are sort of mostly lovingly referred to as bag holders, which means they're just holding on to a trade that went the wrong way and they got stuck. And we don't want to do that. We want to quickly dump a trade that's not working out. And I'll show you a little bit more how to do that. It's great that we can watch this live. It's so good that we can watch this live because there's just nothing like learning from a chart that's moving in real time. Okay, so it's jumping, it's moving, it's getting very close to those highs, and it's still not there yet. And I've watched this before. I've watched this a lot of times before, a stock that gets close to jumping through those levels and can't quite get there. So we'll see if it can. All right. It's just barely trying to break through those levels. And we'll see if it can continue. If it does continue, it looks like the $20 even area might be a really very reasonable profit target. So we'll see what it can do. I'll put a little alert here on the stock and see if it can break above that level, and we'll get it'll play a little chime if it can break through that level, and we'll see where it goes. It's fun. It's really exciting when we can see a stock moving in real time. Now, it's later in the day than I would like to trade. The moves that happen in the earlier morning, those are the moves that are more substantial. And obviously, the earlier in the race, quote unquote, that you get into something, the longer it can go. And that's typical. All right, I'm going to check the questions panel again. I had my trading account open off to the side here, so I'm going to check the questions panel here also. James says, do you recommend buying the pullback after a breakout? No. See, that's what I'm saying. No, no, and no, and no. Because I feel like the pullback is an indication that it doesn't actually want to go, or that it is not actually going to continue going up. Brian says, when you see a break as you're seeing in PWM, at what point do you decide in real time to not take the trade during the breakout? Okay, so you take what I would recommend, or kind of what the way that I think about this is, Brian, you take a small trade every single time. You take a trade that's so small that even if it moves against you or goes, quote unquote, the wrong way, that it doesn't lead to any kind of substantial loss or problem in your trading account. So you don't want any single trade to make or break you. You don't want to let any single trade ever sort of be the trade that breaks your account or causes any significant issues. And if you take a really tiny, small trade on the breakout, then it can move against you at first, and you don't have to worry about that so much. Once again, the earlier in the day that you trade, the more likely it is that a stock can continue moving in the direction that you wanted it to go and that you expected it to go. Michael's got 5 bags, so 5 stocks that he's holding that didn't go in exactly the right way. Joshua Klein says, so are you and Tim in some type of competition? No, not at all. No, I'm not in any competition with any of the cool people that I work with. So Jeff says, how do I do that when the stock breaks out and I buy it? How do I know how long to stay in that position before I sell? Okay, great. So we mentioned this a little bit earlier. What I will do is I will draw these profit target levels on a company. And we did this with NIR just a few moments ago. We talked about these breakouts and we talked about drawing these profit target levels. And that's exactly what I will do. So I draw those levels, and that's one of the questions. So you can do a couple of things. You can buy in a breakout and wait for the first red candle. You can do that. You can also use those target levels. And I'm going to answer the question, and Rami has a really great question. How do you avoid false breakouts? So the short answer, which I will give you the longer answer also, the short answer is that you avoid a false breakout by simply having very modest and very easy to reach first profit targets. And I use Fibonacci retracement levels for my profit targets, Rami, and they work extraordinarily well. We have basically a 90+% win rate on these profit target levels, and it gives you a very, very small amount of profit at a high probability on the breakout. Then you can move your stop loss to break even, and the rest of it is kind of a free ride, so to speak. And that is so important to do in a market that can move fast and furious and quick and can move against you very, very quickly. So what I like to do is have a very modest, easy to reach profit target level on those trades. For example, on PWM, we can redraw our fib retracement levels. And yeah, it looks like 2044 is the next level higher if it continues upward. So Ira says, do you trade short? Yeah, you better, but yeah, you bet your bottom I do. Absolutely. Joshua said, I had 200, now I got 270 off of listening to what you said. Yeah, absolutely. Josh, it works. It just works. I'm so happy to hear that. And you deserve all the good things that are going on, and you deserve that success that you're having in your trading. I'm so happy to hear. So do you wait for a confirmation candle, asks Scott. I love these questions and keep them coming. So I don't wait for a confirmation candle. I don't do that. So what I wait for is for the breakout above a level with a very modest and reasonably easy target for profit. And that seems to cover everything that I need to have it do. James says, do you consider taking profits or scaling out every 25 cents? Nope. I just use those fib retracement profit target levels. Brian may not be able to finish the webinar. I think it's probably available on YouTube later, but I don't know. Jaime says, if I set a stop loss, am I in charge of selling? If you set a stop loss, it will absolutely trigger without your help whatsoever. A stop loss will happen, and if you set a stop loss in your trading platform, it will trigger automatically for you without you having to do anything else. I'm going to take a look here. Yeah, if you set a stop loss, then the stop loss will hit and trigger without your help or any interference from you whatsoever. All right, so we're just going to keep an eye on this for a moment, and then we'll get back over to the rest of the presentation. I welcome your questions. I'm going to teach you how I take profit target levels. I'm going to teach you how I draw those, and I think you're really going to enjoy that conversation. I've got an alert set over here. So let's say that this morning you were interested in trading. So the top stocks this morning in the pre-market session, PWM, GRRR. Let's look at GRRR. That was the top stock in the pre-market session. So this will be a great example of one. Let me just put PWM over here on the side so I can still see it. Keep an eye on that from the corner of my eye. Okay, let's talk about profit target levels. I get a lot of questions about this, and in order to teach it to you, I'm going to have the pleasure of reviewing everything that we talked about at the beginning of the presentation. So, hey everybody, if you're just kind of getting here now and getting situated, I just want to say welcome. My name is Rob Booker. I'm your host. I've been trading for 23 years. I work together with Tim Sykes in the Tim Sykes Challenge, and I trade live with the traders inside the challenge. And that's what we're doing here today. You're kind of getting a preview of what it's like to analyze market activity and trade together. This morning, GRRR popped up on most scanning tools, including the Stocks to Trade Top Gainers and Oracle and a bunch of others, as a #1 stock to watch. What I will do together with members of the Tim Sykes Challenge is I will draw a level or a line across the highest high that the stock has gone so far that morning in the pre-market session. And then, as I mentioned, I will trade a breakout from beyond that level immediately on the breakout. And the question becomes, well, where are you taking profits? How are you setting up profit taking to not get, screwed or holding the bag on that trade? How do you handle that? And here's how I handle it. And I'm going to review this a few times so that it really becomes clear. What I use are what are referred to as Fibonacci retracement levels. Fibonacci numbers are these special fancy numbers which were never originally used for trading, but were used and found in nature. And the Fibonacci ratio or the golden ratio is a very popular kind of cool thing to find out about. Well, on your charts, every single charting platform that exists, they will have a Fibonacci retracement tool. And what I do is I draw a Fibonacci retracement from the highest high of the pre-market session to the lowest low that was reached after before the breakout, and it gives me these profit target levels. So the first level is at 405, second level at 424, and so on. And if I trade a breakout from beyond the pre-market high, I like to immediately make sure that I take some profit or all of my profit at the first profit target level. It's the highest probability profit target level. Then there's another one, and another one, and another one, and the stocks will usually continue higher until they exhaust all of the levels that they have. They don't get there every single time, but if you've been on these webinars, Joshua Klein has been here. If you've been on these webinars before, you've seen me talk about this, and you have seen it work over and over and over and over and over and over and over again ad infinitum. The modest profit target, the quick profit target, is the easiest one for the stock to reach. And I'm all about having quick profit targets that are easy for the stock to reach so that I'm not holding on to a stock and hoping and praying and trying to get a home run. I'm just trying to knock one into the outfield and get a single. That's what I'm trying to do over and over and over again. And that's why I invented and trade this strategy. All right. All right. So I use the 5-minute chart for trading. Yes. Someone said BBIG just broke out. Yeah. So we can apply this to BBIG. So let's look at BBIG over here on the side, and I'll show you exactly what you can do with this methodology on BBIG. Let's say that you found out about BBIG today only after it had jumped up, and you drew a line across the highest high that the stock had gone so far that day, and then it broke out again and continued higher. You could buy it immediately on the breakout, and then the candle turns red, and that's a concern. And I understand that people, that's understandably something that would concern people. What I'm going to do in that case is I'm going to make sure I have my fib retracement levels drawn, and I have profit targets set up along the way. A very brief, very quick profit target, one after the other, after the other, after the other. And if I miss that first trade on that first breakout, and it jumps up again and it creates a high, I'll trade it on a breakout again and again and again. And those profit target levels are there to protect me and tell me that it's reached a point where it's probably not going to go any further. Now, stocks can just continue breaking out and moving higher all day long. They can just keep breaking out, and sometimes they do. And once it breaks out and moves higher, you can draw a new level across the new high of the day, and you can continue to trade those breakouts as it breaks higher and higher and higher. Sam says, I made about $200 on GRRR this morning. I feel like I could have made more, but did use the fib retrace correctly. I also got on the ticker rig and made about $100. That's perfect. All you want to do is just keep banking profits, Sam. That's great. That's just great. Amy says, hey, Rob, I may have missed your answer to this. Do you trade in and out always in a day? Or on occasion, do you let trades run more than a day? So I typically close all of my trades out on the same day that I take them. For those of you that have less than $25,000 in your account, you may wonder, well, what am I supposed to do? I can only take 3 trades a week. And the dirty little secret is 3 trades a week is plenty. You can just take 3 great trades, bank those, and spend the other days studying and learning and testing and getting ready, saving money, working, and all of those other things to get your account over that initial limit. Okay, so David says, what's that called again? It is referred to and called a fib or Fibonacci retracement. All right, I love the questions. These are great. I love these questions. Someone said, how do you make a new high mark? You use a horizontal line drawing tool that is freely available on just about every single trading platform ever invented. All right, keep those questions coming. Always happy to hear your questions. Okay, so Glenn says, how do you get your high mark to take profit? Okay, so what I do is I take that fib retracement tool and I draw it from the highest high that was made down to a low level that was made after, and then it will draw these levels for me automatically. And that's the kind of, like I said, that's the kind of stuff that we do in the mornings together. And that first profit target level is the highest probability, easiest one for it to reach. So Rami says, at what price do you put the buy stop order? I put it 1 penny higher than the highest high. Great question. Joshua says, where do I find fib retrace? You just search it. Just search it up. Okay, Kirk says, please discuss volume versus float pre-market. I would love to. Absolutely love to. So I'm going to quickly sort of do a brief overview of volume and float. And then everybody, I'm going to drop a link inside the chat box. If you'd like to do more of this and talk about the Tim Sykes Challenge, you can book a call at this link that you see on the screen. I've just got to drop it in here, and then we can get to that volume and float question. And that link should work fine. Yes, it does. Okay. Let me put the link in here. Okay, great. So Lindsay says, no, was it? Debbie says, is BBIG a good buy right now? No, it's already broken through the highs, and it's just printing the candles that you would be happy to watch this and be in the trade already, but it's not, you don't chase after it already after it's already broken through the levels that you were watching for it to break through. Okay, let's talk about the volume versus float relationship. All right. Volume and float. Float is the total number of available shares for trading. So think of float as, like, let's say that there's only one gas station in your town, and that gas station has 30 gallons of gas left. That's the float, 30 gallons. Let's say that there are 1,000 cars lined up to get those 30 gallons of gas. That's a lot of volume, and that's a small total amount of gas available. The same is true in the world of trading. Imagine a stock that has 10 million shares traded of volume in a day. The total number of available shares for trading is only 300,000 shares. There's only a supply of 300,000 shares, but there's trading volume of 10 million shares. That means the volume is greater than the float, and that means there's just not enough of this stock to go around. That's a volume and float issue. And this is one of the greatest indications that a stock will run and continue to run all day long. It's not the only determining factor, but it is a major one. Now, as you look at BBIG, it broke through the level. It went to target number 1. You could move your stop loss up to the entry. then it moves to level number 2, then it moves to level number 3. And every single time it reaches a new level, you can move your stop up to the level behind it. And you can trail your stop like that. That's the only way I can imagine ever being willing to use or have a trailing stop. All right. See what other questions came in. Okay, Webull. Jaime says, in Webull, whatever money I use to buy, it takes 2 days to settle. So yes, you're dealing with a cash account and you have to wait for settlement. So one way or the other, if your account is less than $25,000, you can take 3-day trades a week, basically. If you want to take more than that, you can open up another account with another broker and get yourself 3 more trades, for example. All right. So I'm going to take just a brief moment here and let you know a little bit more about what I do and what's going on here. So I put a link inside the chat box, robbiebooker.com/challenge. And if you click on that link, that will take you to a page where you can schedule a time for us to talk and discuss your trading future and put together a strategic plan for your trading. And if you're interested in that, just click the link in the chat box and we can set up a time to talk. Now, what that's all about is it's a free call to strategize about your trading and introduce you to the program, the Tim Sykes Challenge, where we teach traders. And that's it. It's a free call. Some of you are going to want to join the team. Some of you are going to want to be a part of it. And if you're selected and if you qualify, we'd love to work together with you. I'd love to trade with you every single day. So the best way to find out, the best way to put together a plan is to click that link in the chat box and schedule that free call. So I'm going to give you a moment to do that. And when I come back, we'll answer a few last questions about the charts, about the trades, and about what's going on now. And I'll wish you a very happy weekend. All right, so I'll be right back in just a moment. Okay, I'm already right back. So our friend here, Scott, says, I mark the high of the day using the horizontal ray. So I would use horizontal line. I know it sounds like it's the same. I would use a horizontal line, not a ray. Either one's really fine. And then, yes, you could put an alert on the horizontal line there to let you know when that level is broken. Ron says, should the float then be less than the volume to enter trades? It doesn't have to be. But it's ideal if it is, Ron. It's better if it is, but it's not completely and absolutely necessary. Trevor Stokes, hey, Rob, just took 20% on BBIG using your strategy. That's 2 out of 2 today. Hey, way to go, man. Trevor, that's awesome. Way to go. Lindsay, do wicks play a role in decisions? Yep. Yeah. Well, I mean, it's just part of the candle. It's just, yeah, the high of the day on BBIG is at the top of the shadow or wick. Absolutely. All right. Well, we've said everything that needs to be said. We've covered it all. We've got you covered, my friends. I'd love the chance to work together with you. If you feel like now is the time to work together, click that link in the chat box, schedule a time to talk. I'll leave that up and open for another 20 seconds or so. But I'm going to turn off my microphone. I'll turn off screen sharing in just a moment. And if you want to work together, click that link in the chat box or the link that you see on the screen right now and set up a time for us to talk, and we'll see if it's a good idea for us to work together.